Fox 6 News, part of the Raycom News Network, Alabama's news source.
Are interest rates headed higher? That's what the Federal Reserve is hinting at.
The latest word on that came just hours ago when the Fed released the minutes of its most recent meeting. Here's Fox 6 News anchor Scott Richards with more.
Beth, Steve, the question is always, what will the Fed do and when will they do it? And what does it mean? We look at that in tonight's Making Sense report. Joining me now are financial advisors Stewart Welch and Kimberly Reynolds. How do you interpret the latest news on unemployment?
Scott, the initial reaction from investors was fairly positive. Stocks rose. The Labor Department reported that we're adding jobs, but the unemployment rate remained the same, and that's because we're adding just enough jobs to keep up with the population rate. So we're not gaining, but we're basically treading water. And there's also a concern that the number of part-time jobs has increased.
Kimberly, what areas of the economy are we seeing jobs being added?
Scott, we saw a bulk of the job increases in the hospitality industry and saw little change in manufacturing and construction jobs. Therefore, the quality of jobs added was weak.
Stewart, how do these numbers play into where the economy and the stock market may go now?
Well, the Labor Department report is a good source of information on how the Fed will make decisions on monetary policy and its $85 billion a month bond buying program. These reports will definitely play into the Fed's actions in the future.
And that could affect us all.
Scott, it will affect interest rates, and that affects everything. If job numbers improve, the Fed's going to cut back on their bond buying, and that will send interest rates higher. That's bad for bonds and potentially good for stocks.
From the Fed's minutes today, we now know they would likely slow their bond purchases if the job market continues improving. Stocks got a little bounce out of today's Fed news, but then evened out when investors concluded the Fed was basically giving the same indications it already did last month.